Yeah, and I think everything you just said, you should teach at a class at the Sloan School of Business at some point, Michael, because it was it was pretty good, pretty tasty, those two quadrants. Just a couple final questions before you go. You mentioned potentially those FANG companies maybe doing what you did with MicroStrategy, taking chunks of their treasury or leveraging into these markets. Are you surprised more companies haven't? Obviously, it seems like you talked Elon into it. And I don't know if he didn't necessarily get rid of his Bitcoin, but obviously I guess they're not taking it. So just thoughts on that. And then finally, just how this all plays out with China. Just would love to get your closing thoughts on that.
Okay, so with regard to corporate adoption, corporate adoption of Bitcoin has exploded over the last 12 months. If you roll the clock back 12 months, let's go back to July of 2020. I did a search. I think I found one company that had held like $2 million worth of Bitcoin for a period. That was it. And so if you look today, there are billions and billions of dollars spread across a couple of dozen companies, 2-3 dozen public companies. So,
but you and Elon are the big people that have invested, right? No one else has gone into the billions, right?
We're the biggest, but Tesla's still got billions on its balance sheet. And then if you go to Galaxy and Marathon and Square, they've got hundreds of millions. So we've made good progress in the first 12 months. But generally, the challenge for publicly traded companies is that digital assets and accounting for digital assets, right, is not kept up with the rate of growth of the industry. So the traditional GAAP accounting treatment in North America, in the US specifically, is indefinite intangible, which means that if you buy $1 billion of Bitcoin and it trades down 20% for a minute, and then it increases by a factor of 10, when you report the period, you have $10 billion of real Bitcoin, but you would report that you have 800 million worth of Bitcoin, and there would be a $9.2 billion difference between the pro forma fair market value and between the indefinite intangible book value. And that creates opacity and confusion, and then you would have to create pro formas to explain to your outside shareholders where the $9.2 billion went, or, do you have 800 million or do you have 10 billion? Okay, so if you're a traditional CFO or treasurer and you have a beautiful P&L and a beautiful balance sheet, then putting a lot of raw digital assets on the balance sheet in that form where you get that indefinite intangible accounting treatment would give you pause. Now you have the other option. You could actually buy it as a fund. Then you hold a security, and then normally most of the time the securities are fair value accounting, and then you'll be showing $10 billion of security. But you run into all sorts of other issues, like there's the SEC 40 Act, where if you have more than 40% of your assets in securities, you trip that act, and now you're a different type of company, you're a finance company. And so all of a sudden you have conservative CFOs and lawyers saying, well, if we do it this way, then we got this accounting optics issue. If we do it the other way, then maybe we have this 40 Act issue. And so let's think about it a bit longer. And then, of course, if I actually bought $1 billion of Bitcoin and it went up by a factor of 10, I would have a $9 billion capital gain. And if I ever wanted to transfer the Bitcoin from one custodian to another custodian, like I've got $10 billion in one bank in Singapore wants to give me 10% yield, and so I can make $1 billion a year. But I've got it tied up with the first fund, and they're giving me 1% yield, and so I'm losing 900 million a year. But if I want to transfer it, I can't because I don't have the custodial rights to the Bitcoin, so I have to sell it. So when I sell it, I get a $3 billion capital gain tax. So you can see the complexity here. Which is a complex. You don't have it if you're an individual, and if you're a private office, and if you're a fund, you don't really have that complexity. But there are certain classes of investors that have certain complexities on this, and that's why it's not the simplest thing. I think that over time, we will see, there's already an awareness that the accounting is not necessarily most straightforward, and a congressman, Tom Emmers, wrote a letter to the head of FASB, signed by a bunch of other congressmen, saying, "Hey, could you take a look at this?" There's no awareness of that. Whether anything changes, who knows, right? And it's different in different parts of the world. But that's a long-winded answer to what's going on. There are asymmetries in the market. We could sit and we could whine about it, and we could feel sorry for ourselves about it, or you could flip it around and say, that's your opportunity, Brian.
Yeah.
I mean, MicroStrategy went through the process of rotating our shareholder base to actually educate them. And so now that we've done that and people look at our Bitcoin holdings and our performance, it's actually a benefit. The other thing we did is we issued equity, converts, and senior secured debt, which are Bitcoin derivatives. And that means that if you're an investor and you want the Bitcoin exposure, but you'd rather own the security, well, maybe you'd rather own the MicroStrategy security than the Bitcoin. And so instead of complaining about the problem, be the solution to the problem. I could turn it around and say, well, if accounting wasn't indefinite and intangible, Bitcoin might cost you a lot more to buy right now. So if they ever change that might change your risk reward scenario. So think about, are you happy that Apple hasn't deployed Bitcoin as part of Apple Pay, or are you unhappy? On the day when they announce that they're rolling it out, Bitcoin is trading up, and if you didn't buy everything you wanted to buy, then you'll be thinking, man, I should have bought more before they did that thing.